Peace and blessings, everybody. It's your boy Thanks Leo, and once again, welcome to Sauce Factory Wednesday. Today, we got some stuff to talk about. Not every day is a good day in the market. Not every trade is a winning trade. I know we normally go over the winning setups, how you win the trade, what's the best setups to take. But today, we want to flip this around and say, hey, why did this trade fail? So I already had to do a little homework and research to kind of go back and find those losing trades, those losing setups. I got some winners, I got some losers, and everything in between that. And as we go along, this is live recording, right? On the Zoom. We're gonna go over some other setups, right? Why this lost, this, that, and the third, blah, blah, blah. Right. So stay smooth. Let's get into it. So right here, we got the NQ. We're gonna start off with the NQ, NASDAQ 100 on the futures market. As you look, price came into this channel, right? Now, you see price breaking down, breaking up, breaking down. It's the low. So we had a breaker structure here. You had a little wick here, price retrace, and then you seen price coming back down. A lot of times people will say, hey, we're going to go ahead and short the market here. If you're using any crossovers, so crossover I like to use is a 513 with a 200 for the long bull trend for that crossover to go ahead and take my trades. You had a crossover here at this point. Boom. Right there, right? That's your 513 crossover. But you got to ask, why did it fail? Right? Let's go grab our emoji. And reason why it failed. Let's start off with our oscillators. So we seen we was in a downtrend, momentum leaving out. But what you did not count on, momentum found in a base to rally back up, right? Once it found support, boom, it took off again. Well, it was simple. Your oscillators in bullish territory. So this one thing a lot of scalpers don't understand or don't see. If you're taking a high amount of trades, right? This happens on all time frames. So you a high frequent trader where you taking these setups left and right, in and out, in and out, in and out, right? A lot of times you get caught up in the mess because you're not paying attention to what side your oscillator's on. This is a bullish market here, right? Even on the 1 minute that we're currently sitting on, we're in a bullish territory. MACD is way up here on the bullish side of the market. So is our RSI. And from there, that's how you get caught up. By being in these setups, you won't see it coming, right? You won't see it coming because you are looking at these small time frames. You're getting wrapped up in the trades, and boom, next thing you know, you smoke. Your crossover happy, you may have an alert saying you're gonna say, all right, I'm gonna short the market here. Boom, 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 boom. It's going well, all is green. You refuse to move your stop loss. It's kind of get a little indentation right there. Boom, you'll say, hey, this is my setup here. Stop loss above the entry candle, and you say you're gonna take it short for 100 ticks, right? 105. But you get stopped out. You get stopped out. Why is that? You did not pay attention to your oscillators. As this thing dragging down, it cuts. You still had time. You refuse to exit. Boom. Stop out right here. Market took your lunch money. Oh man, that's messed up. Now you got a loss on the record. You had to book that loss. But in reality, it should have waited. Let price drag down, let it do what it need to do. Showed you what it gonna do. Look for entry. Say, hey, we got structure here. They never swept this high here. Even though they was breaking down, they never swept the high. That is simply cruising. Well, the market had to reset. They had a nice strong run. They had to reset, pull it back down to a decent price. Had to discount it for the buyers to step in again to lift it back up. Another thing too, which you want to pay attention to, see these K2 lines. These lines ain't here for fun and games, right? You see how close they are together? That's telling you that's low momentum, right? Look at the histograms on the MACD. That's very tight. That's low. When it was running on the bull side, look what it was doing, right? When it started doing that, that's how you know you about to enter consolidation when they're really tight. When it's really tight, that means it's low momentum in the market and the market is going to consolidate. So when the market is consolidating, the thing about oscillators are they will come back to the neutral zone, which is the zero level. All oscillators come back to neutral, which is their halfway point. Same thing with the RSI, right? They're going to come back to neutral, find support, let them gather their soldiers in. Typically, if they are on that side of the market, they're going to continue running on that side of the market. If they really was going to dump it, they would have left downward force and you would have seen them drag this below the zero level. So that's why that's a losing trade. Now, let's let the show go on. Okay. Here. Now, we on the bull side of the market. What we have here is a 3 candlestick order block continuation, right? You actually had 2 of them back to back, right? So let's clone this. I just noticed this one now. Right, grab it. Come on, box. Stop playing. Boom. All right. Ashley took this setup on a fun pitch. It was on the floor this morning, and we took this setup, right? So I seen this candlestick coming up, and I said, hey, we got a 3 candlestick order block continuation. I said, I'm not going to take it. I seen this pivot right here. So I ran my fibs. I said, I'm looking for a decent retracement here, and I just followed it. I said, okay, you can go as high as you want, buddy. I said, you're not going to try me. So the moment I seen this candle, I seen my order block. I had my retracement ready. It came down. I set my limit order like right on the exit of the block. It hit. Cool. Went up there. 2 traders took this, 2 different outcomes, right? I wasn't going to stick around, move my stop loss in a profit very quickly, and I got out of dodge. It hit my stop. It should have went off to my negative 27, which is always my target, right? This target number 1 off that is the negative 27 fib, right? But it hit, boom, failed to get the crack the zero level on the breakout, and it broke back down. And that was murder she wrote. Why is that? Right? Clearly, it was in an uptrend. We didn't have no reason to get out. If you're using EMAs, you'll say, like, hey, my EMAs are not crossing over. What is the problem here, right? Well, you have to worry about this factor. It was setting up a bearish divergence. So look right here, your RSI, boom, boom, right? It went up, came down, but when RSI came back up, look, it barely hit the top here, right? That letting you know momentum is dipping. Same thing with your MACD. Look, MACD is coming down. It failed to make that higher high, right? Just like a chart, it reads the same thing. There's a lower low, boom, it's turned into a lower high. Set you right up. There's a clean setup. Even though the market's going up, look what momentum is doing. It's going down. Momentum is going down. I'm just going to blow this up real quick so y'all can see this. From here to here, momentum is leaving the market, right? So that last little rally was actually a fake out. It was just a last hurrah to get a couple more buyers in the market, get a couple of late guys in the market for them to dump it. They was ready to take it down, but they cannot take it down with everybody in the market expecting it to go down. So they're going to pump it. First, this the pump, and then this the dump. So you got your pump, and then you got your dump. That's exactly what happened. So traders who seen the order blocks, who took these order block setups, and that you did not use proper risk management and lock in profits at a very split, second, making that split decision, you got trapped in a bad trade. Now, how will one of those trades look, right? You'll say, hey, entry right at the OB. Boom, let's blow that up real quick. You say my stop loss on the other side of it. You got stopped out there. And then you're going to use proper risk to reward. You'll say, well, this is a 27 tick stop loss. I at least need 60 ticks. You ain't going to be greedy because that's a 1 and 3. So you say 75 ticks, right? Okay, cool. When you enter in a trade like this on a reversal, because you're looking for a price to come in and shoot out, right? Let's clean this up. And let's get rid of these moving averages because we don't need them right now. So, boop, let's get this out of there. Let's get this. Oh, let's get this. Okay. So this is what you're looking for price to do. Come down, boom, go off. Okay. Now, initially, your stop loss is right here. Right. This is a big pet peeve of mine when you're taking reversal trades. Stop loss in proper location, right? The moment you get your pivot candle, which is this one right here, cool. Now you can, your risk is defined, right? Let's zoom in. So I want everybody to see this later on. Your risk is already defined. You have your pivot, great, boom. My stop loss is here. Now I can instantly take my stop loss there, right? So I went from 11 ticks, right? My stop loss was way down there, right? So here's a go. Here we go right here. 25 ticks for the stop. For the pivot point is 11 ticks. So I can move my stop loss 11 ticks closer. So that automatically cheapen my trade. Once you get your next candle and it already start rocking it off, guess what? You can automatically move your stop loss to the bottom of this candle because it's the pivot candle. If it's going to go off, it's going to go off. If not, it's going to break down, stop you out automatically. But if it's a real pivot trade, and it's a real reversal trade, it should leave this candle alone. This candle should not take that wick out, right? And it should go off. So let's look at it, right? You see this low? Cool. It can match it. That's why you want to be a little bit below it. Then the moment that trade go green, you can move your stop loss into profit, just like that. Let price do what it need to do. Price need to keep on rocketing, right? If you had your entry right there, you can put your entry 2 ticks in the profit real quick, right? Boom, just like that. Stop loss 2 ticks in profit. Letting price do what it need to do. Raise your stop loss up accordingly. Then you say, hey, I want to lock in. As soon as this candle close, I want to be on the bottom side of this candle. Price stop me out. Okay, trade over. Don't go back in the trade. Number one problem with traders, they want to re-enter the market right away after getting stopped out versus waiting for a new setup. You have no setup here. Why enter the market? You don't have one. You're going to say, I'm going to play the OB again. The trade did not get far enough away from this OB. And then on top of that, you say, man, why dip down? Guess what you have here, right? What you didn't see. Boom. BOS. You had a breaker structure. Yes. But here's the thing you didn't see. Where is my broom? Give me my broom. That's a liquidity sweep. Liquidity sweep, right? They finessed you, my boy. They finessed you. They got you to go long. Got them, coach. Swept liquidity, then took your cheese. Yeah. Yeah. They knew you was going to play that breakout. They finessed you because some people don't have the guts to play the reversal trades. They don't have what it takes to enter here with that limit order. So they're going to play it safe. They're going to have a limit order set here. So what reversal trade is going to, what breakout trade is going to do, right? They say, well, stop loss got to be a structure, and then I'm going to go for a one or whatever, right? You're going to be like, oh, yeah, I'm going to go for this crazy number. Boom, whatever. Take profit away and hiccup there. So you're going to wait for that candle to break out. The candle breaks out, then breaks down. You say, oh, this is all good. It's all good. It ain't break structure. It ain't break structure. Boom, they stopped you out. Now you're sitting there looking crazy. You feel? Because the simple fact, it was a finesse. The best entry is the reversal trade in continuation with the trend. The trend was up. Guess what? If it's coming down to a level of support, if it start rejecting, it's safe to take that trade because you already have a defined risk. Versus having 53 ticks on the table, if you would have simply took the risk down here, you would only risk 25, 27 ticks at best if you take it at the OB versus trying to take the breakout, saying I want to be more risk averse. You just put 30 ticks on the board for no reason that you didn't have to give up versus taking a risk down here. You would have had at least a moment of clarity before they dropped the market, and you could have say, hey, I can target the high. Because most traders did exactly this, right? They say, well, you can play the breakout. I'm going to play the break above because I know it's a short run. All right, cool. They hit that. Great. I can exit here, or at least I can lock in enough profits where it's worth my while to take that trade. And then I don't get finessed. You get finessed because you're a breakout trader. I get a little bit of profits. I'm out the trade, whoop-de-whoop, by risk management. But if you don't use the risk management, you're going to get swept. You're going to get swept. It happens all day long, right? Break down, break above, liquidity sweep, then dump. That's simple, right? Cool. Now you start seeing it. Change your structure here, right? Boom. Cool. Price failed. That's a lower low, lower high, lower low, boom, lower high. It does it all day long, right? Because this is your new low. What they do, break a structure. Okay. After break a structure, they're going to pull up. Boom. Now, once again, you did a breakout trade. Stop loss right there, right? Let's say you put your stop loss right here once again. Oh, wait. We're going to use the long short position. Keep this smooth, nice and smooth. You know, say, man, I've got my entry right there. I'm going to go short. Boom. Or you got one of them crazy stop losses. You gonna say, I'm putting a structure, da da da, and they're gonna drop for 100 ticks because the news coming out. And I'm gonna be smooth today. All that good Gucci stuff, whatever you gonna say, right? You got the 80 tick stop loss. They took your cheese right off your cracker, left you there in the car crying, rethinking life, talking about this stuff don't work. It's a scam. It's a scam. No, you got scammed because you took the wrong trade. If you wasn't here on the pivot, right? Once again, taking trades on the pivot, you see trade, the market broke down. Okay, cool. What did you have here? A break of structure. Once again, market structure shift. I got to spell this out just in case people miss this stuff. So I'm going to put that right there. Boom. Market structure shift. Boom, boom. We got our break of structure, SOS. It do the same thing all day long. Break a structure, price retrace. Come on now, talk to me nice. We're going to run a fib here because I know y'all like those fibs. 50% retracement. Guess what? It comes to the 50%, start rejecting. You get a doji, followed by what? A bearish engulfing. You can easily enter that trade there, play the breakdown, right? If you're not a greedy trader and you say you want to be a scalper, you want to scalp your life away, let's get this loser out the way real quick. Let's get that loser breakout trade out the way real quick. Trash. You target the low. You say, hey, if it pivot there, my stop loss need to go right above there, right? If it breaks the body, that's why I'm gonna enter. As soon as you see this candle come in and start breaking below that body, you can enter there a little more aggressive. You want to be passive aggressive, you'll take the wick. Boom, play the low. You know they're gonna run the low. So you can easily, once again, negative 27, where they pivot at negative 27. Talk to me nice. Come on now. Trying to put you on game for free 99. Feel me? Give you $1 million worth of game, free 99. That's what that boy say, right? So if you would have played it just like that, 88 ticks that quick, 30 tick stop loss. Use your risk management. Once that candle close, put your stop loss here, right? So you take your stop loss there, lock in some ticks. Boom. If it didn't hit your take profit, it come back. Guess what? You stopped out in profit at the end of the day because you want to take trades from point A to point B. So in the moment they pull back up here, once again, they pull back up here, right? What did they do? They took the high, right? They took this high. Why is that? Remember, if I would have went short, my stop loss would have been here. Most people looking for a 1 to 3 and a 1 to 10 trade. You looking for that 1 to 10, guess what? You left your stop loss there, looking for lower lows. Guess what they did? They ran it back to get your money. You feel me? Right before the 618, they tank it. Boom, boom. That's smooth. Finesse them all day long, right? Let me copy my broom. I don't feel like grabbing another one. Another liquidity sweep. Finesse game. Drop it down. SOS. It does this all day long. Now let's look at the oscillators. What did the oscillator say to the face? Smack. Look, when it bounced, guess what? That was a weak push-up. Look at that. That's weak. No momentum there at all. Look what your RSI did. Barely got above the 50 level, right? Creeping. When you playing reversals, look at the arches in your momentums, right? Every time you're looking at your reversals, look at the arches in your oscillators. You see how they arching over? Boom, dump action, right? Even at the crossover on the MACD, you wouldn't been late. Take the low. You can target the last previous low because that's where price always going to go. They're going to take out the last low, the last high. You got clear targets. You want to play it safe, target the low, target the highs all day, every day. This is what it does. Fib. Trying to put you on game now. Let's go. All right, let's clean that up. Let's slide to the left. I run to the right. You know what I mean. Whoop. Okay. Is that all my NQ examples? Yeah. So let's get out of NQ now. That was NQ. Now we're gonna slide on that CL. Boom, 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 boom. I'm gonna bag out to a higher time frame real quick. Got something set up over there. All right, great deal. So right here, we have a nice FEG, fair value gap. For those who don't know, now you know. You'll say, why did this one work? It was a great, got the check mark for a pass, right? Price retrace, boom, price reject, it going down, right? We clearly see this is current time, it's going down. Let's look at it. What happened? Once again, another bearish divergence, right? It's set up. It's showing you momentum is leaving out. It hit the hit the fair value gap, bounce, 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 bounce. If you didn't take it right away, remember your stop loss at the high here, right? Supposed to be simple, just like this. You want to be somewhere in the middle of that candle. You got your targets. If you go look at the other videos, you know how to pick your targets, right? For the fair value gap. Boom, 30 tick risk. You already know, make it worth your while, right? So when price hit and it finally started dumping, look at your momentum. It's telling you what's happening. It started looking weak here, start arching over. You could have entered, had your limit order set, risk is defined. If you don't have a limit order set, then your risk is whatever your risk is. Then you got to say, all right, my risk is the high. Even if you would have said, all right, cool, I'm going to enter on the way down and break down. My stop loss a little bit above the high. You never want to get swept that easy because they will bounce it back up. So just know that. If they sweep the high, they'll do it to you. But looking at your oscillators, it's telling you, hey, momentum leaving out. We can go ahead and take this trade. Ding, 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 ding. You win. Winner, winner, chicken dinner, right? Cool. Good trade. Let's slide over. I got some more examples. We on the lower time frames today. Y'all know normally like my higher time frames, but I had a lot of examples, down here low, down low. Now, another fair value gap with the order block. Why did it fail? Let's look at it. MACD, bearish territory, right? But when it came to the time it actually got to the fair value gap, what happened? The MACD was wide open, right? Momentum was pushing. Look at that. Momentum was actually pushing upwards. It had too much momentum, too much force, right? Things in motion stays in motion. Boom. Everything was going straight up. It blew straight through that fair value gap. Stop loss hit. That's why you have one, right? So you're going to look at it, say, I'm going short again. Stop loss right there. You can even put it at the high, however you want to do it. Target your low, right? But this time you lost the trade. L. Book the L, call it a day. Don't try to play the other way. Just simply book your L, look for a new setup, right? Take the L on the chin. It is what it is. Why did you lose? Because momentum was not your friend. You want to see that thing approaching it, and then MACD stays below your zero level. But here's another thing you may miss, right? Look what happened here. You had your market structure shift, right? Boom, boom, boom. There we go. Off back. Market structure shift here, right? They swept the highs, didn't really care for a retracement. We know that's a loser. Look at that out of there, right? So when they went, of course, they're going to take this out. They gave you a little bit of pullback here, then took off running. Momentum never came back down. So this was the first indication that they was picking it up. Because one, price didn't take out this low. They shift there, then they came over here, gave you another little market shift. They took the low, boom, got the liquidity, right? This would a lot of people say, oh, yeah, it's going to come down. Gave you a little quick internal breaker structure, but that was a lie. We know it was. That was nothing but a little sweep. Nothing but a little quick sweep game. Right? Sweep game. They swept, boom, took off running. Then give you the time of day of a look back. They said, nah, we good. If you had stop loss right there, you got out early. Had stop loss up here, you got out with a little pain. If you had stop loss up there, you crying in the car. Let's keep it in mind, right? So you can book your L wherever you want it. You can say, oh my God, I normally go here, right? Wherever in hell you want to go, you can book your L wherever you like it, right? If you want it to L from here to here to here, you pick it. You pick the spot, take the L. It is what it is. You take the L, triage the trade, review the trade. Why did you lose? Simple little things like that. Not paying attention to the momentum of the trend. That caused people to lose a lot of trades that they did not have to lose because you're entering the market at the wrong time. When you enter the market, when the momentum is not on your side, you will get smoked all day long. Smoked salmon, baby. Smoked salmon. It happens. Never fails, right? Let me see. Do I got another setup on crude oil? I think I do. There we go. Oh yeah, this was on a 1 hour. That's right. So we got this huge 1 hour fair value gap right here. Boom. You go grab one of these. So I have to make another one. Saving trees, right? Uh, you had this 1 hour fair value gap. Price came in there, bounced around, danced around. Like a music video, they'll just dancing all around the background, and the background is doing what they do. Gave you hope, all that good stuff. But look what happened. They said we ain't going nowhere. Nah, big dog, we ain't going nowhere. When they start breaking down like this, and that thing curved, you still sitting in there hoping and praying, they smoked you because they was on the way out. They was in bullish territory. All they did was just pull back, reset the oscillators, and took off running again. You got smoked. That's what I'm saying. You have to recognize these different things when it comes down to momentum, trading oscillators, so you won't get caught up in bad trades. We play these trades every single day, these setups, and you wondering why they work. Sometimes they work, sometimes they don't, because you're taking the wrong type of setup. Momentum was not on your side. The market was not on your side. It was against you at that moment, right? It's okay. We triage, we review, we reflect, and then we get better, right? When you look at these things, you get better, you recognize what went wrong. I can show you what goes right all day long, but if you never see what goes wrong, then you won't see what not to do. Learn from others' mistakes. Look at the past chart setups and say, why did that fail? Really evaluate it. It didn't happen for no reason. It was other telltale signs to give you the answer, right? So let's slide over to Apple. I'm gonna slide over here. There we go. We'll go down to this little 12-minute chart real quick. Boop. Now, and then we're gonna put on our crossovers, right? You take you down the back seat. So typically you was playing your crossovers, your EMA crossovers. Okay, great. You had a 513 crossover. It crossed below the 200. You said, okay, cool. It's bearish. I'm shorting Apple. But you didn't see this OB over here, this 3 candlestick order block. So you can be, a moving average expert, whatever you want to call yourself, right? A moving average EMA technician, whatever, right? But the person who's trading order blocks knew, like, hey, this is a bullish order block. I'm gonna wait for my entry here. The greedy scalper gonna enter here, trying to get some money real quick, not knowing when to exit. A good time turned into a bad time real fast, right? So you took the crossover. You don't manage your trades. You said, hey, somebody else take the wheel. I'm not managing my trades. I have no stop loss. I have no risk management. I don't readjust my stop as the trade, continues. I don't do nothing. I enter the trade and I just let it go. You said Apple at all-time highs. Ain't no way they can keep going. I'm just gonna let it take this sell to the dirt. I'm gonna ride it all week, blah, blah, blah. Whatever you thinking in your head. Then boom, they hit this little consolidation right here. They start bouncing around. You saw it, man. They just consolidating. They're gonna break down. And the next thing you know, they pop. Now you're crying in the car. You had no risk management. They wiped the whole position out. You may even average down, thinking you still hope. You say, oh man, it consolidate. I can get more positions because it's below the 13. They ain't doing nothing. You didn't see it coming. They bust you in the mouth. They ain't see it coming. You saying you got jumped, but it was one person whooping on you. Mm-hmm. Nah. We seen that fight. You was by yourself with that butt whooping right there. Mm-hmm. Yeah, it's cool. It's okay. We ain't gonna tell nobody though. But simple things like that. This little funky little doji right here. Let's talk about it. Right? It's a little simple doji right here. 3 candlestick order block continuation. Boom, boom, boom. Right? That's it. Ding, ding, ding. Right here. Talk about this in a couple videos too. Love that pattern. These moving arrows out of here. Love that pattern, right? 3 candlestick order block continuation. You highlight that thing. What price do? What price do? It came right down in there, bounced, and gone, went about their business. Went on and went. So you be like, oh, Even if you want to say we playing price action, had to break a structure, had to pull back, cool, then it dropped. Ran lows, right? Cool. And you thinking, hey, they're gonna pull back up. Let's say you was responsible. You scalped it down. Okay, cool. You got your money. Then they pull back up. You think it's gonna be a pullback, and they just do something crazy. They just do something crazy. I'm just saying, you got to be wise about this stuff, right? People looking at the market. It's okay if you missed a minor detail, but you got to recognize when things go bad, don't go with them. So that way you can pivot, adjust, take small losses, stay in the game longer, and recover faster from your mistakes. But being in the now, hoping things will go better, hoping things will get better, staying in losing trades, holding these losers dear to your heart because they're your precious baby. How people want to call it, right? They treat them like they children or something. These losing trades. I just can't, that traders need a little more help. Let me give Apple a little more chances. They'll slow starter. They'll get it together one day. No, it's a loser. Cut it loose. It's a loser. Let it go. They ain't doing nothing in life. That trade ain't gonna get his life together. It's over. It's over. Just go ahead and book your loss. Stop hoping on a prayer. Stop praying. Stop going to the prayer line, hoping for a miracle to happen. The trade is done. You smoked. Stop dumping, wasting money on it. Okay, it's over now. It's over. Go on and hang that trade up. Go on about your business now. There's another one I was looking at this week. MasterCard. Mm-hmm. I was doing a credit spread on this joint. And when I tell you they had that 10-year bond auction, boy, it got ugly. So I'm watching this currently at we over here, right? It's Wednesday now. I'm watching this, everything going smooth, right? We got our low, it breaking down, price break down. We over here now. Monday, okay, great. Tuesday, we over here, right? We do this little drop. Now they breaking down, but this what happened. Price did this, right? This the candle that put screws to me. And I'm watching price on a lower time frame. I'm like, cool. I get in. Where is my icon? I get in over here on a rejection, sliding back down, right? Bond auction come out, price consolidate. I'm looking at the trade. I said, we're not making progress. We are not making progress at all. I got a credit spread on this. So I'm already paid up front. I just got to hold, right? No, this was the debit spread. So I already sold a position, bought a position. So debit spreads, quick example. I'm not gonna go long on this. I bought the position, the contract in front, and I sold a contract behind me. So I sold one strike below my strike. That way I made my position cheaper. I sold somebody else a position and I bought one in front. So I can buy more time close to the money and I don't have to spend that much money to do so, right? So I'm riding it down like, okay, I already had my bracket order set up. So risk management was already there. Risk 25%, looking for a 50% return on this trade. Well, things started stalling out. Things started going bad. I hurried and cut. I only lost $6 on that, right? Because I sold a contract to somebody else. So when things go bad, don't go with them. If they start going bad, at least minimize your risk. I sold somebody else a position. They paid for my contract in return. So when it was time to get out of Dodge, well, I got a clean break on a cheaper side. What happened to them? Whatever happened to them, they had to take the full front of that L that you bought that contract straight up. But you did those type of trading methods, you can lessen the blow when things start going bad, right? So when price pulled all the way up here, I'm not gonna mess around and find out how high it's gonna go. No, I'm gonna exit, trade over. It is what it is. I don't stick around. Things start looking ugly. I'm not sticking around for this. Nah, I'm gonna go home and watch the news and see how it turned out. Wait till somebody talk about it on Instagram real quick. I'm good. Yeah, we smooth out here. I don't have to do all that. Then it is what it is. So this is what I mean about when things go bad, don't go with them. Risk management, people. It happens to all of us, right? What happened? Price consolidating below the zero. The next thing you know, they took off running. We had news. The catalyst was news. Popped everything up. Now they dumping. Okay. Oh well. That's that. So that's my little tangent for today. I'm gonna stop the record real quick, and I hope y'all enjoyed this.